Let's go across to Seth Freeman, CEO of EM Capital Management, who's joining in to talk to us about his outlook on global equity markets. Morning, Seth. Thanks for joining in. Seth, back home, of course, it is Diwali and markets are in a festive mood. And it seems like globally as well, there is celebratory sort of feeling that's playing out. The Dow has hit 23,000. Asian markets have been looking good, barring today. What do you feel? All this fear of liquidity sort of getting sucked out does not seem to impact the sentiment of flows for now.
Well, it is amazing that we're seeing consistency across the globe at the moment. I guess that really reflects the expectation that I think central banks are going to be very slow in raising interest rates. Although we expect interest rates to rise, they're apparently baked in. We're seeing, okay earnings, not great earnings, and certainly not across the board. But it's very interesting in terms of India. Just last week, a major publication, Barron's, suggested that the Indian market could triple over the next 10 years. Meanwhile, if you're reading domestic Indian news, there's concern about, or Asian market news, that India is once again very highly valued.
Are you buying India? I mean, not literally, but yeah, you're buying stocks in India.
Actually, I wish I could afford India. Yeah, sure, this is a long run. I love to go back to what I enjoy quoting from December 2004 when the market was 6,800. And the headline was in the Wall Street Journal, "The market's overheated." So it's a long program. For speculators, I think it's a little tougher because we know it's sentiment driven and some weird announcement could, cut stocks 10, 15% virtually overnight.
Seth, while of course there are some concerns on valuations with regard to Indian markets, but what about the rest of the emerging market pack? What is your preferred destinations for investments right now? Are you fully invested? Are you sitting on cash? What is the current approach?
Well, I think it's important for investors to have a reasonable cushion. I mean, on one hand, you need to have your money working because you're competing against returns posted by others who may be more or less highly invested. But I think there is an opportunity to keep, 15, 20% cash and take some dips, look at dips in stocks or particularly industries that may have slight dips and take advantage of those when everything else is relatively high.
Right. Seth, a lot of foreign institutional investors continue saying that they're positive on India, but ever since the December rally from the low point on the Nifty, and now we're again at life high levels, FII flows have been largely absent. So, where essentially is the FII flow going in terms of active as well as passive equity channelization of those funds? And do you think there will come a time, 6 months or maybe 1 year down the line, when funds will return to India, or will you wait for some kind of a reasonable correction to come through first?
Well, over the last 3 or 4 years, we've seen both foreign retail and institutional investors going quite heavily into ETFs and ETNs, but mainly ETFs that are index-based. So what would really make the market change for India at this point, I think, would be two areas. One is if the overall weighting for India was to be adjusted in the global benchmark indexes that are used by institutional investors. That would really have impact. Allocations to India are relatively constrained because of so much index investing. The other would be to see greater activity in the NPAs and NPLs. There is another universe of investors that will come into India as the process becomes clearer with the new bankruptcy rules and work out these distressed assets. And some of those investors will reinvest in the market. That money will stay in India.
Seth, what is your take on commodities right now. I mean, base metals have been on a tear for the last year now. Does it seem like this rally could extend further, or are you now a little more circumspect on where base metals are headed?
Well, I think the base metals reflect some expectations that we're going to continue to see basic manufacturing and continued infrastructure projects.
And what about oil, Seth? I mean, that's been again on a good footing, trading at almost a 3-week high. U.S. stockpiles could potentially have declined in the reading that we'll get later on in the day. Could this rally extend further, or do you think it is stopping out now?
Well, I was reading some reports suggesting we could have $80 oil and stay there for some time. I guess it's just a view of industrial output. From a technology standpoint, it's easier and easier to extract oil. On the other hand, I was also reading some other reports that in terms of fracking and other oil pumping and so forth, that in some cases the easy oil has been extracted, and so the costs might go up to continue to do exploration.
Right, Seth, and as far as the developed universe is concerned, what is the preference right now? Because we are seeing a lot of uncertainty with regard to the fiscal plan in the US, while things in Europe have been recovering in terms of earnings for frontline as well as peripheral. So in the developed universe, do you expect some churn to come through? And already a lot of it has. But do you think Europe will continue to remain preferred compared to US?
I do. Even Italy's starting to look a little better. I think that in terms of going back to the other question about money flowing back into India from foreign investors, that India is at this time, competing much more with the U.S. markets and European markets. Europe has really had a rather striking recovery over the last 6 months, and there is so much policy uncertainty here in the United States that in some ways Europe is looking a little more stable, with the exception of noise we're hearing about Brexit and what those impacts might be. I think the real bogey right now, frankly, is China. It must have really raised some eyebrows when the most recent Economist came out and President Xi was named the world's most powerful man. We're not used to seeing that here in the United States.